Just a little reminder, and you saw that on your TV screen. The Financial Services Sector Regulator, the Central Bank of Nigeria, and the Nigeria Communications Commission yesterday decided to send the Deputy Governor at the Central Bank, Dr. Joseph Nana, to head an interim board of Etisalat Nigeria as the chairman, and he and the others will oversee the settlement of the controversial multi-million-dollar loan that the telecom company is owing 13 Nigerian banks. There's a new chief executive officer and a chief financial officer that was also brought in by these long negotiations between the regulators, the Etisalat company, and, of course, the investors and the banks as well. So it was a lot of long meetings. In the meantime, the new team will restructure the company based on when a new team of shareholders emerges to pick up the shares of Etisalat of Abu Dhabi, who is the withdrawing investor and the brand owner of the name Etisalat that came in from the Middle East, from United Arab Emirates. That brand hasn't been withdrawn. The owners, the Etisalat of Abu Dhabi, is still warehousing his 45% or so shares with a trustee company here in Nigeria. So this will have to be unpacked via a share transaction. Then all the banks will sit together with the Dr. Joseph Nana and the rest of his team to look at when would Etisalat be able to pay back these loans, the outstanding part of the loans and the interest accruing, get a new board in place, and of course, and fill other positions. They have 3 to 6 months, according to sources within the market. They have, Dr. Nana has 3 to 6 months tenure and the rest of his team to fix this problem, as it were, and get out of Etisalat. This is the first time Nigeria's central bank will be appointing a deputy governor or one of his own to be the chairman of a non-bank or non-financial institution. Non-bank and non-financial institution. Meantime, of course, you've seen this within the last couple of minutes on the program. The Economic and Financial Crimes Commission has secured an order from a federal high court in Abuja to seize some monies, about 500 million in local currency and about $500,000 US. They say part of the Paris Club money linked to the Zamfara State Governor Abdulaziz Yari, who is also the chairman of the Nigeria Governors Forum. Report says the money is recovered from the governor. It was diverted from the Nigeria Governors Forum accounts into building an hotel in Lagos, according to EFCC papers. Buying government treasury bills and stashing some of the monies away in overseas accounts. Let's get back to the markets. The stock market, of course, the big seven oil and gas yesterday were part of the depression for the second trading day in the week. The segment lost 1.81% yesterday because 40 oil was down, Seplat was in the red, corn oil was in the red, Oando was in the red. 4 of the big 7 were all on the losers list of the market. Corn oil fell 4.98%. It was one of the massive. And Seplat 1.06% despite the news around the extension of his $150 million recovery or revolving credit facility that will now be repaid by the end of December 2018. So let's come back to when we started in the week on Monday, when the Central Bank of Nigeria and FBN released the June Purchasing Managers Index, what you call the Manufacturing Activity Report, showing Nigeria's economy, the industrial sector, was been recovering in the month of June, a steady recovery, as it were, gentle but steady. And analyst community has been very positive about this manufacturing index reading. Let's bring Vetiva, capital management economist, to the conversation. Of course, Vetiva on Tuesday released its own reports on this and says its own thoughts and calls its June expansion wraps up encouraging Q2 2017. Famoroti is Michael Famoroti is the economist at Vetiva Capital Management, and is the gentleman you see there joining us to bring some analysis into this and his own thoughts. Good morning, Michael. Thanks for coming through.
Morning. Thank you very much for having me, boss.
Okay. Yeah, thank you very much. This one-page report, 4 paragraphs, as it were, was in sync that, look, these PMI numbers are good enough and it's a signal that economy is revving up.
Yes, so just as a reminder, the PMI, or Purchasing Managers Index, is basically supposed to give an indication of how the economy or those parts of the business environment have performed in that month compared to the previous month. So anything above 50 indicates that things have been better in that month. And what we saw generally is across both the manufacturing and non-manufacturing sector, things improved in June. And that's a trend that we have been seeing for most of Q2, which sort of gives context for the title, where we just focus on the quarter as opposed to just looking at June's performance.
Yes, in terms of how this paces out, this is a strong cross-sector performance, and you're just talking about the non-manufacturing and non-manufacturing. If we use the central bank data report to do your analysis or to try to read the tea leaves, as it were.
Yes. So in the non-manufacturing, according to data that CBN got, all the sub-indices increased in June. For non-manufacturing, there were some highlights as well. So the non-manufacturing PMI is actually the highest number since November 2014, which means that that sector expanded at its quickest pace since that month of the year. I also point out employment, which has been a problem for a long time. So employment has grown in the last 2 months across both sectors, and that is the best run. Looking at CBN data, that is the best run since sometime in 2014. So it doesn't say that the labor market is suddenly thriving, but it does show that things have picked up slightly from where we were at the end of last year and coming into this year. And given that jobs and labor is a very important and sensitive topic, I think that's a particularly good highlight of these June numbers.
If you put the manufacturing and non-manufacturing data together, and you folks there, led by you, as Vertiba Capital says, the key feature for the second quarter, well, you put a question mark there if the economy was actually rebounding in the second quarter. We started the year with about 0.75%